Hi everyone, this is Ali Hussein Kassim with our weekly roundup of tech news across Africa. This week we are covering a couple of interesting news. The first one is Equity Bank's hiring of a top insurance executive in Nairobi. The second one is Standard Chartered Bank's Kenya move into digital lending app, separate from its normal banking app. Third is Selcom Tanzania's acquisition of a microfinance bank, a deposit-taking microfinance bank. And I'll tell you how pivotal that is for the financial services sector in Tanzania. Third is Nigeria's clearing of 98% of $850 million backlog owed to international airlines. And last but not least, MTN Momo's, that's mobile money for for those who may not understand what that means, launches its open API platform, tongue-in-cheek, borrowing a leaf from Safaricom's M-Pesa. So let's move back to Equity Bank's hiring of a top-notch insurance executive from AR Insurance Holdings in Nairobi, Kenya. But let's take one step back. A couple of years back, Dr. James Mwangi, who is the group CEO at Equity Bank, made a move to create a holding company within, so to sort of separate the banking operations and move into other financial services plays. Equity is one of the most innovative banks across Africa, hands down. Pioneer in many things. They did the first mobile virtual network operator license of any bank in Africa and probably the world, not sure. That moved then Equitel. They launched Equitel. And that main focus was really around ensuring that they can reach their end customer there and not necessarily having to depend on telco operators at that time. That morphed into FinServe. Recently, they have launched an insurance company, General Insurance and Life. And as they were doing that, they already had Equity Afia. These are sort of small clinics that they were launching and franchising out to doctors across the region. Now it seems like they're doubling down with a hire from an insurance company. AR is one of the pioneer health insurance companies in the region. And that hire speaks volumes towards what Dr. James Mwangi's vision is for Equity Holdings. Good luck to them. This is obviously a Kenyan champion. I have my issues in terms of some of the executions. I believe Equity can do a lot better than it's doing. But then, I'm a spectator, so I leave it to Dr. James Mwangi and his team to do what they see or feel is best for that champion banking giant in East and Central Africa. I wish them all the best. Good luck to you guys. Now we move to Standard Chartered's foray into digital lending apps. With their launch of Standard Chartered's or SC Juza. That was launched yesterday. So for me, the question is, why is a bank now that already has a banking license to lend, that can embed lending within its core banking platform, why is it moving into lending apps like Tala, Branch, Zenka, Opay, and the rest of them? We have 51 digital lenders in Kenya, licensed by the Central Bank of Kenya. What is it that Juza is giving the market that the core platform cannot do? I fail to understand. I mean, this Me Too strategy is not gelling with me. But then again, maybe just a spectator. I may just be a spectator. And again, I wish Standard Chartered the best in jumping into this foray. But unfortunately for them, that launch has not started very well. I tried to log on to that platform yesterday. I gave up. And I think there have been quite a bit of negative comments on social media. So I think, again, lessons here. Before you're launching something, just do your due diligence, check, cross-check, give it to internal players, give it to a few close group players outside who will test the product. Or maybe it was just one of those things that Murphy's Law just checks in and just says, whatever can go wrong will go wrong. All the best to them. We now move to Tanzania, Selcom. Samir Hirji, spot on, brother. What you're doing with Selcom Tanzania, that is something quite interesting. The boldness of acquiring a microfinance bank is fantastic. For those who may not know what Selcom is a leading fintech in Tanzania and now foraying into the larger Eastern African region. I think that acquisition is a no-brainer. My hope and prayer is that they will not be shackled by regulatory pitfalls for them not to be able to actually continue to innovate the way they have continued to innovate to the point where they are able to acquire a microfinance bank. This is something that I'll be watching very, very closely. Congratulations, guys. Keep on doing what you're doing. Next, we move to Nigeria, where the government has finally almost cleared a $850 million backlog owed to international airlines. So it's not a secret that Nigeria has struggled with Forex for a while. That speaks to the potential of or having a conversation about de-dollarizing some of these conversations, some of these transactions across Africa. Is that possible? Is this something that perhaps the Pan-African payment system could actually help deal with? My hope and prayer is that organizations who are trading across Africa don't get shackled because of lack of foreign currency. Lastly, we touch on MTN's mobile money foray into a platform for open APIs for people to be able to plug in, and the potential for this is what we have seen, the potential that M-Pesa's Daraja platform has been able to achieve in Kenya. If we can learn anything from what M-Pesa has done to launch their Daraja platform, and that continues to improve every day, the potential for Nigeria's MTN mobile money in a 240 million plus population where mobile money is just starting to scratch the surface. That is a big deal. That will move a long way to grow mobile money exponentially in Africa's largest populated population country. What are the potentials here? The potentials are banks being able to plug in seamlessly, fintechs being able to plug in seamlessly into mobile money, government being able to use mobile money for revenue collection, microfinance banks, chamas, fintechs. It is the opportunity. I wonder why it wasn't done earlier. That's it for this week, guys. Looking forward to catching up with you guys next week. Thank you.